Is this just a sign that the Chinese recovery isn't really panning out as the senior leadership there would have hoped?
Well, the data clearly missed the market consensus expectation. It came as a surprise, but at the same time, it kind of echoed the weak demand, the credit demand data released last Friday. And we think, basically currently the strongest headwinds tend to be the COVID clusters onshore and the corresponding containment measures, as well as the housing market strains.
Can I just ask you what the general outlook is here? Isn't it a case that so long as China is pursuing the zero COVID policy, it's going to be very, very difficult to get to those higher growth numbers and eventually to get to potential outputs?
To be honest, we think, the zero COVID policy does, come with economic cost. But at the same time, if we look at the data, this time around, for example, July, we have seen quite some COVID clusters spread out, but when we look at the data, the kind of the negative shock seemed to be smaller in magnitude. And we didn't see the supply chain, disruption as we saw back in April. So that means, to some extent, the government have implemented more coordinated containment measures. So that helped to, kind of reduce containment costs to some extent. But yes, the headwind persists.
So to what extent do you think the property slowdown is derailing the Chinese recovery here? It comes up a lot in the discussions about the China macroeconomic situation, and certainly the central bank would not have reacted today if there was not some concern about what's been happening in the property space.
Well, I think reportedly, currently, the financial regulators are gathering together, trying to, come up with a solution for the housing market. At the same time, I just want to point out, this is very different from what we saw in the U.S. about 15 years ago. The U.S. and China's housing market are fundamentally different in the sense that, the two factors contributing to the U.S. Subprime mortgage crisis, one being the poor underwriting standard, the other being the over-securitization. Those elements are missing in China. So in that case, China has started with a much better shape without so much, risk floating around. But that being said, we have seen the unexpected turns, such as a mortgage boycott and others. So it is still very important for the financial regulators to come up with a holistic solution to the housing market strains.